everybody, and welcome to the next episode of Belly to Belly. And we're here today speaking with great friend Ben Kohler from BLK.FX. How are you, Ben?
I'm great, thank you. How are you, Bill?
I am wonderful. And so our topic today is around helping companies collect and pay and make payments internationally. And obviously, as you know, our audience are companies that are expanding in the U.S. From quite often from other countries, and this problem comes up. But before we hop into the topic specifically, do you want to just share briefly what BLK.FX does to help companies expanding in the U.S.?
Absolutely. So we as a business basically provide a multi-currency banking ecosystem. So multi-currency accounts that our clients can receive payments into or pay out from. The biggest thing, and we'll go into this, I'm sure, in a little bit more detail after, is keeping currencies in the right currencies, i.e. getting them paid into the right accounts. So that's the main sort of ecosystem we offer our clients. And we combine that with getting very competitive foreign exchange and FX rates, where sometimes high street banks aren't as competitive. So that's the main areas of focus. And I suppose international payments on top of that too.
Oh, perfect. Well, sounds good. So, thinking about companies expanding to the U.S., obviously they're coming into a big market. But where do you see companies failing or being challenged as they're expanding into the U.S. market?
So obviously a slight banking skew here for me. I see this quite often, whether that's even just businesses who are expanding to the US market, but still keeping their corporate structure based in the UK, but still doing business in the US. Of course, I see this around foreign exchange, especially, and banking. I've seen many companies in the past that will receive US dollars for their services or their products, but have those US dollars paid into a sterling bank account, for example. High street banks very often take very high margins. I like to call it the biggest hidden fee in banking, because it's one of those things that you're just given a conversion rate rather than actually told what the fee is as such. Unlike a payment where it might be £15 or $20 as a fee to actually make the payment. So that's a volume-based fee, right? It's a percentage. It's not a flat fee. And that's where people get caught out. So I see sometimes, and this goes back to what I was mentioning before, companies getting a different currency paid into a currency or their base currency account. This is often a big fee hitter and a big fee taker for banks, something that we're trying to, and there's a lot of competition in our space, but something our space in the FX brokerage space is trying to avoid and basically improve for clients in terms of the rates they get. Another thing that I see quite often is actually making it simple for US customers to pay you. So something that we do is we offer our clients, even UK limited businesses, irrelevant if they're moving or setting up an incorporated structure in the UK, we give them local US bank account details to essentially allow their US customers to pay via ABA or ACH, rather than necessarily over SWIFT, which does work, and the US can pay via the SWIFT network. It works very well. There's often more fees, slightly slower times. But again, just that banking infrastructure isn't often something thought about by companies working internationally, whether that's in the US or elsewhere, or if they're setting up in the US, for example, where normally they'll try and get a bank account based in the US. But as I'm sure, Bill, you're very familiar, and maybe some of the people watching, that can take quite a while. And often there's lots of fees that come in with that. I'm not going to unravel that sort of web just yet. But more often than not, the challenges I see definitely around just the ecosystem of a company in terms of their banking. And then it's the fees that they're paying, fees for payments, fees obviously on foreign exchange, as I mentioned. Again, they're volume-based fees. If you're dealing with high volumes, you don't want to get caught up paying 1-2% on top of the conversion rate. And sometimes there's not much you can do about it. But actually, if you speak to the right people, and hence obviously we're having this conversation, and we've done a lot of business together, that's something that you can avoid. I'll quickly touch on another part, which is actually the risk management around foreign exchange. Everyone knows that FX goes up and down. Often, if you're going on holiday, often you coming to the UK, you'll look at the rate and you want the rate to be low, sterling against the dollar. If I'm going to the US on holiday, I want it to be high. I want my pounds buying me as many dollars as possible. Now, the fact that moves has a conundrum sort of effect for businesses that might be, let's say, a UK company receiving lots of dollars, or they're moving funds from their LLC or incorporated business to their UK holding company or vice versa. If they're doing that often, the FX rates, irrelevant of where you're buying at with a bank or with a broker like myself, it's going to be changing. I see it often in product-based businesses where there'll be manufacturing costs in US dollars, for example, for UK businesses. And actually every single month they're buying the dollars to buy their or send to their manufacturing partners from sterling. That sterling figure is changing, irrelevant of the fact they're buying $100,000, for example, every single month. And that's just based on the exchange rate. Now, that volatility can be good if the rate goes in your favor, but of course it can have the opposite effect. And actually trying to manage that risk is imperative, I would say, especially in larger businesses. And that's something that is often overlooked too, especially if a company is moving overseas to the US market or the other way.
Right. Yeah. No, you obviously said a lot there. One just quick thing to touch on, we just have a couple minutes here, is I think one of the things that I see that companies don't understand is that our banking is so much different here. We don't have the ease of transfer of funds between banks and companies that is available in the UK and in Europe. And so it's sort of assumed when companies come in that it's easy to transfer. And what we end up as a receiver experiencing that I think our clients don't realize is that if they transfer from outside the US to us, we generally have bank fees for that. And whereas if they set up a US account, we don't. And so if you want to kind of build relationships in the US and kind of not cause your partners and whatnot to absorb costs, having, besides all the other good reasons, that may be another reason why you want to set up a US bank account. And do you see that as well?
Sure. Well, that's exactly the reason that I've picked partners specifically that allow limited businesses, either UK-based or European-based businesses, to have local US accounts, simply to improve their infrastructure, to allow their US customers to pay locally, domestically via ABA or ACH, right? We don't have routing numbers in the UK. In the US, you do. It's your local payment system. In the UK, we have account number and sort code. It's different, as you say. Now, you can connect via SWIFT, but it's more costly, as you said, with the fees, and sometimes slower. So again, the infrastructure to just allow yourself to pay out or receive funds is extremely important. And that's exactly one of the reasons that I've chosen to work with the partners I do, because we can offer that to US-based or UK, European, global businesses, that US infrastructure. It's also important if
Fantastic.
Shopify is one example, Google AdSense, YouTube, often you're withdrawing from these types of vendors and you have to do that locally. And you have to do that via ABA or ACH. So that's another reason.
Good point. Cool. So lightning round, one last question. So you get to work with lots of founders and you see, some that are exceptionally successful and some that are not there yet. What would you say is a kind of a top attribute of the ones who are successful? Kind of what's consistent with the high performing founders, would you say?
I don't want this to sound sort of cliche. I hear a lot of top founders say this and I see it a lot, and I'm going to answer the question like this. But the top founders I work with, they like failing. They love failing. Failing is good. They fail and they fail hard and they don't make those mistakes again. And I'm trying to take that with everything that I do in founding my business. But the one thing that I definitely see is not being scared of that failure. right? Just going for it. Whether that's, for example, something is not simple, because it's not simple, but moving your business to the US market, right? That's a big risk, but you've got to understand that there's things that you'll do that will fail along that process. Now, if you fail and don't make those mistakes again, you're only going to improve. And I don't want it to sound cliche. I know a lot of people sort of say that, but I see it so often. And you can tell from some founders to others who's not scared of failing and who will then progress more.
We actually have a client who has had a couple of very successful exits and expanded to the US successfully. They actually budget for failure. So it's actually it is not just expected, it's actually a part of their budgeting. So all good. Well, this has been fantastic, Ben. Do you mind if I put your contact details in the description below in case folks want to get a hold of you?
Absolutely not. I would love that. And I'm willing to speak to anyone and give sort of free consultancy. It's what I do anyway, even if we can't do some work together.
Brilliant. Well, thank you for taking the time today. And it's been a real pleasure to chat.
Thank you, Bill. I really appreciate it. And keep up the podcast because I love them.